talk about the live cattle market. We know the heat is stressing the cattle. We know prices are at all-time historical highs. Our cattle producers are sitting there wondering, with all of these input costs and a lot of cattle being purchased at the high end, now got to feed them out through the rest of the fall. Tell us something we might want to do before this market day ends.
Well, the optimism around the cattle complex has been alive and well for basically the whole year, but it's starting to feel a little bit tired following Friday's cattle on feed report, and we've just kind of been a little bit lackluster here this week, which I think is probably healthy for the market. We're treading right near trend line support from those May lows, 179.5 to 180. That was also the spike highs from June. So this is a big level for us. A break and close below there, I think, could potentially spark some long liquidation, which has always been kind of lingering in the back of my head, is the risk of funds exiting their long position. They're net long about 115,000 contracts. And if I think, if there's a technical breakdown, potentially that spurs a little bit more weakness despite the strong fundamental backdrop. I'm not saying the market would potentially fall out of bed, but I think it would be important to manage risk at these levels, certainly.
Absolutely. What you mentioned about the open interest there of the funds, that's about 1/3 of the total open interest in that live cattle market. And we've been declining a little bit on it. So always something to watch for. Oliver, I certainly do appreciate you taking the time to be with me this afternoon. It's Oliver Slope, and he was with Blue Line Futures. And Susanna, I think we got a studio full of people coming in here.
We do.